We know Bitcoin ETFs are the most successful product launch in history. And then someone says, well, if you're going to collect that much money, Bitcoin goes to the moon. But it turns out Bitcoin's risen, but it's kind of churned. I think what happened is a couple things. One is a lot of these ETFs may have been receiving in-kind exchange. So people have their crypto keys, give it to the ETF provider, and then they just stepped up their basis. So that's not going to push up the price of Bitcoin. It adds to their AUM.
A wash.
Yes, it's a wash. And the second is that
Lee explains that part of the stagnation is due to in-kind transfers. Investors with long-held Bitcoin positions are simply transferring their crypto holdings into ETF vehicles. This process doesn't involve buying Bitcoin on the open market. It's a wash trade. While ETF assets go up, the Bitcoin price doesn't necessarily follow.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
we know Bitcoin ETFs are the most successful product launch in history. And then someone says, well, if you're going to collect that much money, Bitcoin goes to the moon. But it turns out Bitcoin's risen, but it's kind of churned. I think what happened is a couple things. One is a lot of these ETFs may have been receiving in-kind exchange. So people have their crypto keys, give it to the ETF provider, and then they just stepped up their basis. So that's not going to push up the price of Bitcoin. It adds to their AUM.
It's a wash.
Yes, it's a wash. And the second is that the ones who aren't involved in ETFs, but maybe they have $10 Bitcoin. We have clients that have bought Bitcoin at $100, and now it's 100,000. They're not looking to, they don't care if Bitcoin goes to a million. They are probably sellers at around 100,000. So we're churning the base now because 95% of the institutional world doesn't own Bitcoin, but a very significant portion of Bitcoin holders are sitting on huge gains. So I think this is the churn that's happening in Bitcoin now. But of course, the companies that serve Bitcoin, like Coinbase or Circle, have seen huge growth, and they've been the best IPOs and the best stocks. So it's almost like maybe you won't make money trading Bitcoin, but look at the infrastructure providers. They've been great stocks.
Dave, the question then maybe goes to you from a macro perspective when it comes to exchange-traded products versus cryptocurrencies. What's the next big thing? Is it going to be maybe Ethereum-based funds, Solana-based funds, or do we kind of diversify out into some of the companies that are involved in the Bitcoin ecosystem, Dave?
Well, I mean, it's hard to know with a speculative asset like Bitcoin where a top is and where the flows are. In this one case, I'll correct Tom, there is no current creation in kind for Bitcoin. So nobody's been able to magically transform their low basis Bitcoin into new basis ETFs. But that doesn't mean we haven't seen a lot of folks take their exposure out of a wallet situation and put it into an ETF where, let's be honest, it's a whole lot easier to transact. It's actually much cheaper. Buying the cheapest ETF right now is cheaper than most direct cash to Bitcoin transactions you could make in any crypto exchange. I think that's been very attractive. So I think that's a lot of it, is we've seen effectively Bitcoin move from one wallet to another wallet, the wallet now being on the ETF. The next big thing to happen in crypto ETFs is probably going to be staking. We'll certainly get some stablecoin ETFs, although I don't think you'll expect to see a huge amount of performance out of those. That's not really what they're there for. They're transaction vehicles. But we have two filings present right now for Cayman-based Solana and ETH staking products that would allow people to participate not just in the growth of the coin's value, but in its use in the DeFi ecosystem, where you can actually generate significant yields, often a few points above what you might get in a regular, sort of more normal fixed income type instrument. So we'll see those products launch this year, I'm fairly certain. And then from there, there's a long tail of smaller coins, smaller crypto applications, real world assets, NFTs, Pudgy Penguins. There'll be product launch there. I'm skeptical we're going to see huge demand like the 150 billion we've seen show up in Bitcoin ETF specifically. Yeah, it's tough to get really excited about international as an investor because we just went through a multi-year period where anything but the US was a terrible bet. Now we're sitting here, if you look at it, year to date or since the election or really over the last year, the S&P 500 is actually the worst performing market you can pretty much find. It's worse performing than all of the core emerging markets. It's worse performing than all of the core developed markets. Now, does that mean everybody should pile in? No, we can explain that deviation. A lot of it has to do with the dollar being down more than 10%. A lot of it has to do with some international allocations themselves moving out of the S&P and back to domestic allocation. We're seeing a lot of talk in Europe, in the UK, about re-domiciling their retail and retirement assets to de-emphasize US investing. That's a marginal bid on all of those external markets and a marginal sale on the US markets. So we're going to see that kind of pressure. I think it's very tough to make the case that people should be piling into international markets and abandoning the S&P 500. But if you have an extraordinary amount of home bias, if you are 100% US invested, this is a good reminder that international diversification is good for a reason. It helps you zig a little bit when you zag like we have been this year.
Over 95% of international markets are SMID, small mid-cap companies. Of the 25 largest companies in the world, 21 are domiciled in the US. There's a reason the US is the sort of the marquee, most liquid market, because once you go outside the US, you don't find, there's not like a Meta in every country. There's not a Palantir in every country. These are uniquely American businesses. So I think that if someone's making a bet on Europe, as Dave says, it's probably cheap beta or it's a factor bet. And I don't have a problem with anyone diversifying that way, but if someone says the US exceptionalism is over, so I'm going to be long Germany, that's a real tactical mistake because there's no FANG in Germany, Mag 7.
Tom Lee draws an insightful parallel from his background as a wireless analyst. He covered the sector from 34 million users to 9 billion. But interestingly, wireless stocks peaked 1/3 into the cycle, even though user growth continued exponentially. This teaches a critical investing lesson. Secular growth does not equal stock outperformance. Investors often overpay for growth too early, and as growth becomes priced in, returns stagnate. Tom applies this lens to current hot themes like AI and cybersecurity.
Well, that's where Fundstrat's research team comes into play. We have about 20 research analysts, and we know there's expiration dates. I mean, think about biotech in 2016. If that was a granny shot theme that had an expiration date, we never did something with COVID or the GLP-1s. We were thinking about that. Are these 10-year story arcs or are these 1 or 2 year? And we decided these were sort of 1 or 2 year. So to us, there is going to be expiration dates. One thing's very obvious to me is when I look at the wireless industry, I grew up as a wireless analyst. And I covered that industry for 17 years, went from 34 million users to 9 billion. So hyper growth, exponential grower. But those stocks peaked relative to the S&P 1/3 into the cycle. Every sector, infrastructure, handsets, spectrum. So it tells me that at some point, even if we say AI is going to last 20 years or cybersecurity, 1/3 into the cycle of that growth cycle, the stocks are going to become market performers. So we are really aware that relative performance is something we have to be mindful of, and that's where our technical research team is very helpful, Mark Newton, and we do something called Super and Sleeper Granny. So we review the lists every month and think about the top 5, bottom 5, and Tireless Ken is our data scientist, and we're constantly reviewing themes. And stay tuned. We have 7 themes. Maybe we'll go to 8 themes, but we might delete a theme. And for now, I'm comfortable that energy security, these are durable themes. There is one that we're almost positive we're going to launch with, and I mean,
what's it going to be? That's your tease. You got to beg. What begs the question? What is it?
Well, we're trying to be looking ahead 10 years, and there is something very obvious to everyone here. So I don't mind sharing it because the way we express it might be unique. Is that there's 2. The first one is what I'd call sovereign security. I think it's now evident to me that the mechanisms are in motion for companies to really fix their supply chains within a sovereign border. And that's a change, right? That's not going to just be 1 or 2 years. And so there's a lot of opportunities there. And the second thing is that, when we first started writing about these themes, this was 7 years ago. So Millennials was the engine. You have to remember, 7 years ago, companies like Snapchat had to convince advertisers to focus on Millennials. And now they're very mainstream. But that means we need to be focusing on Gen Z and then Gen Alpha. So we might have to evolve our demographic theme to kind of orient towards the younger cohorts. And so these are important adjustments that we're playing with, but when we turn it on, it may not be for a couple years, but I'm kind of sharing our thought process.
It's interesting too, Dave. The thought process that Tom just shared took us through the real world evolution of how you evolve or actively manage, if you will, an investment strategy, speaking to the point about actively managed ETFs taking more and more market share. The active management philosophy, is that one that can get as much traction 5, 7, 10 years from now as the passive management side or indexing side of things had in that first 5, 10 years of the ETF life existence in and of itself?
I think we'll get some traction. I think it's very hard to compete against 3 basis point beta as the core of a portfolio. And I think most long-term investors are going to continue to have a passive core. Where active has gotten a lot of traction has been in the edges. I would call this a little bit on the edge. You're probably not going to take the entirety of your portfolio and put it in Tom's fund. No offense, Tom. I think most people will be thinking of this as an explore strategy against their core, which is going to be cheap beta. And I think that's true whether it's fixed income, whether it's emerging markets, whether it's country allocation, whether it's currencies and commodities and cryptocurrencies. I think people will be looking for what is the base case cheap way to get exposure, and are there opportunities to engage an active manager either for raw outperformance or just for better positioning on a risk reward spectrum. That's the smart way, I think, to think about active management, and it does seem to be how most of the market is adopting it.
Tom Lee once again proves why he's one of the most compelling market strategists in the game. From his nuanced take on Bitcoin ETF flows to his evolving thematic strategy and long-term vision for global markets, his insights go far beyond surface-level analysis. In a world full of noise, Lee focuses on the data, the themes, and the macro trends that matter most to investors. Whether you're navigating the complexities of crypto, balancing your portfolio across borders, or simply trying to stay ahead of the curve, his approach combines conviction with caution, innovation with discipline. Please like and subscribe.